CNBC TV 18, celebrating 15 years of leadership.
Welcome back. You're watching Prime Property. International property consultant Knight Frank says out of the last 5 years, 2014 has been the worst for Indian real estate. Sales across the top 6 cities in 2014 fell 17% year-on-year, with NCR being the worst performing market, recording a 43% contraction. As for launches, that dropped by 28% across the big 6 cities in 2014. Sales fell a sharp 43% in Mumbai, followed by a drop of 30% in Hyderabad. I asked Knight Frank if 2015 would bring achhe din for India's property market.
Well, it is too early to say, because the signs are still very, would I say, missable. I won't say that there are huge signs for us to say that the things are going to turn around. So at least next 6 months that we are projecting in this report, we don't see much of growth, very little scope here and there. However, one thing is for sure that we are not seeing any further degrowth. Any further slide is not possible. It will have to be either stable or slightly moving up. But that inching up would hardly be noticeable.
So Zia, do you think prices will go up? Will they improve in 2015?
Well, if you talk about weighted average price, the improvement has been, absolutely hopeless. Because except for Mumbai, in all the other places in the country, the weighted average price movement has hardly been less than 5% per annum. And if I talk about inflation also and then look at the numbers, these are actually negative growth in most of these areas. Mumbai with 10% average growth is the only market which could be either neutral or slightly 1 or 2% growth, taking inflation into account. So that way, if I'm talking about 3 to 5% of improvement in these areas, nothing much to talk about. So once again, as I said, a point I made some time back, as an investor, I should rather not be getting too excited about real estate industry.
So Zia, then what's your advice to investors? Should they go out and actually buy properties in this market?
Well, I would say it's a bad market. General statement, if I have to make, I would say investors should not look at getting quick return from real estate market. That is not to be. Unless you're talking about some rare opportunities where because of sudden change and improvement in infrastructure or sudden new economic driver falling in place, that would have an impact on the environment and the real estate and especially housing in those specific locations, and hence chances of sudden improvement or sudden surge in the property prices going up, those will be rare. But generically, if I have to really make a statement that whether the investor should look at real estate, I would say, well, you need to be cautious.
And if I were to get city-specific, beginning with the National Capital Region, which according to Knight Frank has been hammered out of shape, where can one invest? Which are the growth corridors?
Well, as I said, it will have to be driven by infrastructure. Where are there new road improvements happening, the metro connecting? Where is it that the new location where metro is expected to come in next year and a half or two and still not completely ready? These are a few pockets which you have to watch out for and then bet accordingly.
Well, that's quite generic. According to the Haryana government, the Uttar Pradesh government, we're going to see metros everywhere in Gurgaon, Noida. We already have it in Delhi. But coming to Mumbai now, what's your outlook for the Mumbai property market in 2015? Where can people invest?
See, once again, whatever I spoke about in Delhi is the same situation in Mumbai as well. Once again, a city we are talking about which is starving for infrastructure, which is bursting to its seam, and hence the prices have been absolutely erratic in this city because of so many of these factors. So wherever there is a small piece of infrastructure planned or announced, suddenly you see sudden property price upsurge in those locations. So once again, my advice would be to look out for such gems and invest accordingly.
And Zia, which are these gems?
Well, there are a couple of things they're talking about for quite some time, whether it's a new airport or a few metro lines or coastal roads or east-west connectivities in a few of these locations. There are a few of these opportunities available. Once again, as I said, for any quick return, you have to be geared up to take that risk profiling as well. So obviously, if you're expecting a good return, you have to talk about good risk as well. So what you talk about is perhaps an infrastructure project which could take 1 year or 10. Don't exactly know. So that is the risk that comes packaged into this whole proposition of investing in these projects.
And what about Bangalore? That has actually bucked the trend. So do you think good times will continue for Bangalore in 2015?
Well, Bengaluru has been bucking the trends for last couple of years. In fact, I don't know if it is a milestone in the history of Bengaluru, but for the first time, Bengaluru has sold in a year more units than NCR, Delhi region. And at 55,000 to 57,000 units a year, kind of an absorption, Bengaluru is only going up every year. And this is something happening purely because of the job creation. On one side, it used to be a pretty, I would say, dependent on IT/ITES market for a long time, but that has slowly started changing. Last couple of years, FIIs have made a good impact in Bengaluru market. On the other side, last year at least, we have seen huge amount of impact due to e-commerce. So the point is that the market which was essentially dependent on IT/ITES and also mostly reliant on the American economy has been turning around. So there has been, we've been watching good depth in the Bengaluru market with so many new sectors coming up. So if I talk about the FIIs coming in for last 2-3 years, that has directly impacted the luxury market of the city, because IT/ITES caters to the masses, to the mid-end of the market, but FIIs, etc., with huge salary brackets are actually catering and pushing the demand for luxury market. However, 2015 would, to a large extent, we will see huge amount of development in northern part of Bengaluru, where due to good infrastructure improvement, connectivity, the high speed connect that has shaped up in last 1 year, most of the developers are heading towards north. But I would say long term, one can't miss Bengaluru West, which had been traditionally an industrial area, slowly giving way to urban development. That is something which we can watch out for if you're talking about a long term period of 3 to 5 years.
And can you get specific, which are these areas in North and West Bangalore?
Well, North Bengaluru is essentially towards the airport. We're talking about Hebal, Yelahanka and all these areas, where in last 1 year we have the Super Express connectivity connecting the city to the airport has shaped up. So that is why most of these developments have started moving on this side. Till last year, it used to be South Bengaluru, which was shaping up because of Electronic City, Whitefield and all those areas, Sarjapur. Huge amount of development has already happened, and in fact, the inventory level in South used to be extremely high. So with this infrastructure piece, the connect between North and the city falling into place, huge amount of change has happened, and people are now shifting to northern side of Bengaluru. And the West I'm talking about is more of Yashwantpur, Pinia and all those industrial areas that you can, Bidadi, etc., that you can talk about.
And what about Hyderabad? You know, your report shows Hyderabad has been a dead property market, but you know, finally we've seen political stability return to this region. We've seen the state government also go all out to try and woo investors.
Well, you're right about investment coming into Hyderabad. There have been a huge amount of efforts coming in from the government side, and that is reflecting on the job improvement. Office markets have increased, so almost about 4.5 million square feet of office absorption, new office absorption in Hyderabad is actually a testimony to that people are seriously looking at Hyderabad. On the other side, for housing market, it is still too far off. You know, because the housing absorption of about 15,000 units in a year still is making it as an absolutely hopelessly positioned city. You know, because most of the tier 2 cities actually are into 8 to 10,000 unit absorption in a year. And Hyderabad at its level of 15,000, I think there's a long way to go, at least as far as consumer confidence in buying new housing dwellings. I think it's a long way to go.
So in a nutshell, you don't expect Hyderabad's property market to revive in the short term?
Indeed. So as I said, the job markets will improve, but then for it to show immediate impact on housing will take time. So I don't talk about next 6 months to a year for improvement in Hyderabad. It will have to be longer.
What about Chennai? You know, it was considered to be such a stable property market, but then went on this downward spiral, and that's before Jayalalitha's arrest, or even before the Nokia plant shut down. How are you reading the Chennai market now?
I would still maintain a status quo on Chennai market. The reduction in housing unit absorption, etc., is across the country. So there is nothing specific or there is nothing particularly bad or good about Chennai market. So for me, it will have to be a status quo for Chennai market for next 6 months to a year to come.
That's a bearish Knight Frank saying invest in property cautiously. Well, if you are and want to avail a home loan, then that plan depends completely on your credit score. After this short break, we touch base with the Credit Bureau to find out more on how credit scores work. Stay tuned.